Your money time, even if you don't play the stock market, the average American has been affected by the recent volatility, I should say, on Wall Street. CPA Alan Sanderson of Sandersen Knox and Company joins us this morning. Alan, thanks for coming in, Dark.
Thanks for having me.
Boy, so it was an unprecedented week we saw on Wall Street last week with the 400-point gains, 500-point losses. Now we're hoping to see a fourth straight day of gains today. What is all this? What are people supposed to make about all this volatility?
Well, it was quite a roller coaster ride, obviously, throughout the week. And certainly all eyes were on the stock market. When this all came about, one of the first things we predicted would be volatility in the markets, and certainly that's happened. When you look at the Greek situation causing ripples across that pond, well, we're an 800-pound gorilla. The water kind of sloshed out of the bathtub, let's face it. So the market did go up and down quite a bit, not only for this reason, but for some other reasons. The interesting thing and the paradoxical thing about the whole situation is the bond market stayed strong because when times are tough, people go to the bond market. And so it's kind of it actually stayed very, very good. So you're not seeing the interest rate rises. That'll be a killer to the economy, and that's a good thing.
So I mentioned in the last several days we've seen some positive upticks in the Dow Jones. Do you think the volatility will continue? I mean, what's your opinion on what will happen? I know you can't see into the future, but what's your take?
Well, if I could see into the future, I guarantee I wouldn't be. Oh boy, would I ever! That'd be great. But no, you're going to see some volatility still going into the market, and you're going to see that continue until really such time as the markets and the S&P and all these other folks see us getting our financial house in order from the standpoint of debt. You've got the debt commission and all that. And
what are some of the biggest mistakes? I know we get a lot of calls and people questioning on the streets, you know, I've got my 401k, what do I do with it? We've gotten a lot of advice that just let it be.
You know what?
What's the biggest mistake people are making?
Just like the Beatles, you let it be. Don't panic. You know, back in '86 when you had the big market correction, the folks that were rabbits, the ones that ran or the ones that got hurt, you could have had two people with $1,000 in the market. Maybe it went down 20% and came up 10%. The guy that ran sold out at $800 and had to get back in at $1,100 with fewer shares. The guy that did nothing still had $1,100. So you don't panic. That's the most important thing.
Same premise when we're talking about people saving for their kids' college funds in the stock market. I mean, there's a lot of people concerned about that because you put the money away every month. You hope it's going to be there when your kid finally turns 18, hopefully goes off to college. People not so sure anymore.
Well, the closer you get to the point that you need the money, that's when the volatility gets scary. If you're way back out here from when you need your money, you can ride that roller coaster up and down. But if you're getting up at the end, it starts to get pretty important. So you've got to be careful.
And now we're looking at a video of gold right now. Gold at an all-time high, I mean, approaching $1,800. Can it continue to go up? I've heard some analysts say we've got about 20 seconds left. You know, it's going to reach 2,000. Eventually, it's going to come back down, though. You would think.
Everything goes up and down like that. The metals markets are very volatile. You can get burned fast in metals. The Hunts, for example, lost a huge amount of money trying to corner the silver market a few years back.
Same time, a lot of people made a lot of money on gold this time around, right?
Some people will make money and some people will lose. This is a zero-sum game. Gold stocks do well also in these kinds of times. When there's insecurity, people run to gold or fear of inflation. So you don't want to put all your money in gold. You'll lose big if you do that eventually. But there's nothing wrong with having a little inflation hedge out there.
Alan Sanderson, we appreciate the insight.
My
Thanks
pleasure.
for coming in. Appreciate it.